Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Wednesday, April 26th. There are not one, not two, but three central bank meetings in the next 24 hours. The U.S. Federal Open Market Committee, or FOMC, the Bank of Japan, or BoJ, and the Reserve Bank of New Zealand, RBNZ. Now let's start with the FOMC, the first one. There's no press conference after this meeting, so everything will depend on the statement. The question then is, what changes will they make to the statement? Now, not much has changed in the world since the last meeting on March 16th. There's only been one round of indicators since then, and of course, one data point doesn't make a trend. Nonetheless, the data for inflation and labor that has come out has generally been worse. The February Personal Consumption Expenditure Index was down, the March Producer Price Index was down, and the March CPI showed a slowing in inflation. Inflation expectations have also been retreating. As for the labor market, last time they said that, quote, a range of recent indicators, including strong job gains, points to additional strengthening of the labor market. Since then, the non-farm payrolls have continued healthy, but overall labor market conditions, as measured by the Fed's Labor Market Conditions Index, have deteriorated. Probably the main question is how they see the risks to their outlook. When they raised rates last December, they said that they saw the risks as balanced. In January, however, they dropped the word balanced, and since then they've said they were, quote, closely monitoring global economic and financial developments, unquote. If they now reinstate the line about risks being balanced, that would suggest they're leaning towards a hike in June, and the dollar would probably soar. But if they're still closely monitoring, then there's no reason to change expectations, and it's neutral. Nonetheless, expectations for tightening have declined since the March meeting, as the market heard a number of generally dovish Fed speakers. In that respect, even just a neutral Fed statement could cause the market to push up the likelihood of a June rate hike, which would likely prove positive for the dollar. The view on the Bank of Japan meeting is divided pretty evenly on whether they'll take any steps this time. So we can expect some investors to be surprised either way, and for there to be some volatility in dollar-yen following the meeting. As for what they might do, the domestic reaction to negative interest rates has been, well, negative. And they're already buying up most of the JGB issuance. It was reported on the press last Friday that they're considering a lending facility for banks with negative rates. If that's all there is, then there will probably be a buy the rumor, sell the fact reaction, and the yen could strengthen. Now, some investment banks expect them to increase their purchases of exchange-traded funds. That could lift the Tokyo stock market and pull dollar-yen up with it. In other words, weaken the yen significantly, particularly if the two moves are made together. My view, I think a move is likely. Although they made the radical move to negative rates just 3 months ago, the yen has continued to appreciate, the stock market has fallen, and industrial production has slowed. And on top of the financial problems, the earthquake in Kyushu increased uncertainty. Under these circumstances, I think the Bank of Japan is likely to want to take some steps to shore up business confidence. As for the RBNZ, their decision comes only 3 hours after the FOMC, and so it may get lost in the general market activity. Nonetheless, the market's attributing about a 50-50 chance of a cut, so like in Japan, there's likely to be good volatility no matter what the decision is. Now, the currency has strengthened since the last meeting, but commodity prices, dairy specifically, have strengthened too. Inflation edged up in the first quarter, but it's still well below the RBNZ's target. And the government has been writing letters to the bank's board to put pressure on Governor Wheeler to get inflation up. I would expect no change in rates, but a definite easing bias, perhaps a warning about the possibility of a further cut in June, and comments about the New Zealand dollar that leave the currency weaker. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.